Thank you, Lakshmi. Hello, everybody. I hope you're all enjoying being part of Finacle Conclave so far. I certainly have great memories of last year's event in Dubai, especially the night out in the desert that we had. But like everything else over the last 12 months, this is going to be a session which we're conducting at a distance. I'm Alan McIntyre, and I'm the Global Banking Practice Lead at Accenture. And I'm also responsible for Accenture's partnership with Finacle. So I'm delighted to be moderating this panel today. And I want to start with some quick context setting. Back in the dim and distant days of 2019, the transaction banking landscape was already complex and dynamic. Customer expectations were changing, new technologies were disrupting traditional business models, and new competitors were beginning to emerge. And things have clearly not got any simpler over the last 12 months. During COVID, the industry has been squeezed on two dimensions. First, the general economic disruption has seen some corporate customers thrive and grow and put new demands on their banks, while others have gone into survival mode, supported by trillions of dollars of public sector support. The second force acting on the industry has been an accelerated pivot to truly digital banking, forcing pretty much everything to be done from kitchen tables and spare bedrooms around the world. While there is a completely understandable desire to get back to some sort of normal in 2021, the reality is that we're going to look back on 2020 as a discontinuity in the banking industry and a period in which we saw the rapid development of new operating models built on new business processes, accelerated technology roadmaps, and a workforce that has been both remote but also increasingly augmented. In today's session, we're going to discuss how the forces are reshaping transaction banking operating models and learn how leading banks are adapting to the new normal and leveraging new technologies and new ways of working to ensure their long-term success. So it is my pleasure to introduce you to our eminent group of panelists. We have Harish Natarajan, who's the global lead for payments and market infrastructure at the World Bank. We have Michael Norr, head of payment and liquidity management at Wells Fargo. And last but not least, James Buckley from Infosys Finacle. Panelists, thank you for making the time to join this discussion today. I'm going to pose specific questions to each of you, but if you want to jump in and build on an answer from someone else, or maybe even dispute something that has been said, please feel free to do so. Before we start, I'd like us to do a quick round of introductions to give each of you the chance to talk about your role and also your organization. So maybe if we start with you, Harish.
Thank you, Alan. Hello, everybody. My name is Harish Natarajan. I lead the work at the World Bank on payments and market infrastructures. In the World Bank, as many of you will know, is a development institution, the multilateral development institution supporting the developing countries, emerging markets, and developing economies across the world to end extreme poverty and boosting shared prosperity. Thank you. I'm pleased to be here.
Michael?
Thanks. My name is Michael Norr, and I'm a part of the Global Payment Services Organization here at Wells Fargo. GPS is the correspondent banking arm of Wells Fargo, so we're serving a lot of multinational banks, broker-dealers, some supranational organizations out there in their payment needs. So we're very closely tied, right, to the world economy and payment flows out there. My specific role, so I'm looking after sort of the deposit business, some middle office functions, as well as I'm responsible for various industry representations that I do as part of my role, be it in SWIFT, as well as some domestic working groups.
Thank you, Michael. And James?
James Buckley. I head up partner business in Finacle. Really, what that means is working with the likes of Alan's organization and others to help drive business for the Finacle organization. Finacle is a banking software suite. So obviously, the audience probably know the basics from signing up to this particular conference and conclave. But we provide software right across the gamut of different types of financial services organizations, and notably in the corporate banking, cash management and payment space. We are present in that space. And it's an area that's quite dynamic, I would say, globally, in terms of its changing behavior. And so it's a particular interest to Finacle, because we have to keep pace with the business change, both in cash and payments, as the world moves towards different economic models, and corporates run through different needs and different stresses. Obviously, COVID-19 has created its own unique set of circumstances, but all it's done is increased the pace of change in this particular segment.
Thanks, everyone. Michael, I'm going to come to you with the first question. The pandemic has clearly forced companies to rethink many of the ways in which they do business, from supply chains to digital operations to remote working. Can you maybe share a little bit how Wells Fargo has helped your transaction banking customers to cope with the pandemic, and how that might have varied by market? And also, maybe as a follow-up to that, how much do you think is going to change in 2021, given that we're certainly not out of the woods yet? Is 2021 simply going to be a repeat of 2020?
Yeah, sure, Alan. My pleasure. Well, Wells Fargo is a coast-to-coast bank here in the US. Main business is domestic. Yes, we do have some international as well, but main focus is domestically. And here in the US, we're sort of a multi-headquartered, right? Because it's not like a single site. We have various large, just due to the mergers and acquisitions over the years, significant number of employees in different parts of the country, right? Be it out west in California, be it in the Midwest, up in Minnesota, or obviously here on the East Coast, and specifically there down in North Carolina and here in New York. So as that, we sort of are exposed, right, to the various different trends in COVID response that the US had, and also how it impacted the US economy, as well as its geography differently over time. So the bank really quickly last year, right, when the pandemic hit, was able to really equip, I think, around 200,000 employees who really work from home. That really was fantastic, how the bank was able to organize that across its diverse geographic population to get this organized, including supplying extra hardware and monitors, and get everybody set up, because offices shut down fairly quickly. And not as we know, or as you mentioned, Al, not everyone's work from home situation is slightly different, right? And has caused some stress levels. Depends, right, what your individual situation and your own infrastructure looks like. So the bank also has been doing a good job to provide assistance to employees to that need help, right, with the children, be it from childcare, tutoring support. And that's been very important, right? Because if the employees are distressed at home, they can't do a good job in serving customers, right? Or doing their day-to-day job. So that's been quite an enormous undertaking, right, for the bank. Now, also on our customer side, right? Again, we're exposed to the whole gamut of the U.S. Economy, right? And some customers that are very digital boom in business, right? As we have seen, so a lot of activity in helping them to scale up, right? Payment activity mainly, right? Collections, and they had to adjust supply chains, and flows went in different places. And then with the other parts of the economy, service-oriented, restaurants and other small businesses, they were struggling, right? And here we were really sort of the key conduit into a lot of the government relief programs that are out there, right? Payment protection programs, loan forgiveness programs, where we had to scale up very quickly the support infrastructure to help clients, as well as in general provide like a support center, right? How we can like a resource center, right? Not just for the specific financial needs, but in general, right? Help customers out to get along in this environment, right? So that has been quite amazing job, right? The bank has done, and how we need to do this. And it's all down to a lot of proactive outreach, definitely to our small business customers. Everybody's in a different boat, right? To find out who needs help. They might not be used to or not know all the resources maybe that the bank has access to, but I think from a more economic perspective, it's important to have sort of that conduit, right, for small business towards the banks and the government programs that are out there. I think that's very important. As I said, on the customer side, we do service obviously on the wholesale basis, right? A lot of customers outside the US, but not sort of on the retail or small business side. So there, obviously, we've seen also different responses, right? Definitely my business on the bank side, where countries had a good digital infrastructure to allow work from home, allow good connectivity. We were surprised how well it worked, right? And other markets were struggling because the base infrastructure wasn't there to really cope with this sort of stress level. And yeah, they had to sort of improvise a bit, right? I mean, it has improved, right? It's just they weren't as quick as some markets are better prepared, right? In this space, and we're obviously in each site where we have employees work closely with local health groups, to adapt the model, right? And what sort of level of homework possible, and where we can provide that support. So the balancing act, right? In this case. And yeah, as the last question you had, right, 2021, what sort of prediction there? Everybody's hopeful, obviously, right? The vaccine and so forth, right? Will it do it? But we see already, right? There are challenges from a global level, national level, rollout, how quickly, right? Who wants to get vaccinated and who not? And so we do think, right, this sort of, unfortunately, part of the so COVID will be with us for quite some time, and restrictions and mask wearing and some of the economic restrictions we'll see will unfortunately continue for some time. And we'll see a shift, right, in the economy to those businesses that can better deal with this, right, and ones that really need to rely, right, more on face-to-face contact.
Thank you, Michael. And I think I would generally agree. I mean, I think the perception is that the banking industry has responded very well to this crisis, both as a mechanism for channeling public sector support, but also in support of its customers. It's always nice when the banking industry hasn't caused the crisis, but instead has been able to respond to it in a positive manner, which I think is a general perception this time around. Turning maybe to you now, James. The new waves of COVID that we've been seeing, the different variants, have clearly disrupted plans to reopen economies, which has been adding to the financial pressures on many businesses. If you look back over the last year, many businesses have come to appreciate the value of good financial management, the value of resilience, predictable cash flows, adequate working capital, good risk management information. So maybe from the Finacle perspective, what strategies have worked with your clients to help their end customers survive in what have been very strange and challenging times?
One of the issues, I think, from obviously we're on this sort of lens of a software provider to businesses that in turn are providing to different market segments from a commercial and corporate banking point of view. And the speed at which one can sort of rapidly digitize depends on what you've really done already. So for those customers we already have that have been in stream in implementation programs, of course, they've been able to accelerate delivery to better capability of self-service capabilities, both basic functionality and also data enhancement and analytics that better help cash management decisions and liquidity decisions. But of course, you can only do that if you're already in flight to an extent with an existing program. So where we've got those customers, we've seen a focus and acceleration on ensuring that increased self-service capability and increased functionality is delivered more rapidly. Where the programs that we're involved in are more nascent, what we've seen is a sort of, I would say, a sticking plaster approach where there's been a sort of diversion of executive and management focus to very, very short-term tactical solutions to keep the lights on, so to speak, for certain market segments. The high-end corporates tend to be better served and have better capability delivered from banks, and the lower-end segments tend to have more standardized capabilities. But there have been stresses and needs, and obviously there have been in the government sort of lending programs across the world propping them up, and there have been various rapid initiatives to get software in place to distribute those funds, but at the same time secure the risk in terms of fraud and compliance, which is to an extent diverted away from some of the main programs that were what I call bread and butter business as usual, that has been ongoing for some time over the last 2 or 3 years, especially since the sort of the view of long-term interest rates has been going to be on the floor for quite some time, and now with COVID, obviously they're going to be on the floor semi-permanently potentially. But that's where things have sort of changed from what we see over the last 6 to 12 months. And of course, COVID is continuing, and it looks like a very patchy evolution in terms of what might happen. Obviously, the success of China and the East Asian markets in averting mass COVID outbreaks has facilitated a shift, a macroeconomic shift globally that was going to come anyway over a sort of 5 to 10 year period. That shift has obviously happened much more rapidly, and you can now see the reality of China being the biggest economy coming into sight much more quickly, because they have been able to maintain their economy with sort of obviously limitations with respect to COVID, but far less disruption in the East Asian markets, whereas obviously Europe and the Americas have been very, very badly damaged and will continue to be damaged economically for the next 6 to 12 months. So it's going to require, I think, sort of this year a focus on much more rapid further digitization of the different market segments around corporate and cash and down into SME banking. And then obviously SME and small, medium businesses is where the biggest stresses have been and are continuing to be in significant numbers of segments there. So it'll be interesting to see how that evolves over the next 12 months, because possibly a different hybrid model will need to be in place for the next 2 to 3 years to underpin those segments if they're going to recover.
Thanks, James. I mean, just picking up on one of your points, I do feel a lot of sympathy for a lot of bank CIOs these days, because they can no longer get away with saying, no, that's not possible. Because everybody's on to the spring of 2020 saying, look what we did in 6 weeks. Don't tell me it's not possible to get this done. Not surprisingly, next question is going to go to you, Harish. Even as the threat of the pandemic begins to moderate, as we've been talking about, the economic impact is going to be with us for quite some time. And, governments, corporates, SMEs, multilateral organizations are all adapting and trying to make sure that, we come back quick and potentially stronger. So from a World Bank perspective, how do you see the transaction banking sort of dynamics evolving? And what do you really think banks should be focusing on to enable their customers to navigate the recovery over the coming years?
Thank you, Alan. My responses, of course, will be from my vantage point at the World Bank in our experience supporting client countries in emerging markets and developing economies to respond to the COVID crisis, and then also to build back better, as you rightly pointed out. Our experience and all the data from various surveys, some of which we conducted, is showing a very big shift to digital from paper-based processes, not just for payments, but also for all kinds of business-to-business interactions, and then also for governments when they, as part of their support and relief programs to individuals and businesses affected by the crisis. And in emerging markets and developing economies, in particular businesses, and in particular the micro and small and medium enterprises, were not big adopters of digital banking to begin with, right? So of course they had regular kind of banking accounts and so on, some limited use of internet banking, etc., but never in a very intense way. And one of the big shifts we are seeing is that that is changing, and that has to change in a very big way as part of as things evolve. And this means increased attention to also the digital literacy of the corporates. How do you take them along the journey? How do you make it easier for them to adapt? I think that's one aspect. Also, the authentication frameworks will need to evolve to support that as more and more transactions come on stream related to interactions. And then, as I was mentioning earlier, the business-to-business interactions and for governments, for them to be able to direct some of their relief payments. That means a lot of information has to be now collected and analyzed in a digital way, which could have been done inefficiently, but certainly through paper and other means, it was possible to do them earlier. But when doing it remotely now, all of this has to be done in an automated way using APIs, etc. And that means a lot of integration of government systems with commercial databases, and then also for banking systems, banking applications to open APIs, make it available to businesses to integrate into their accounting systems and so on. So I think that's the other shift we are seeing. And I'm not directly related to this COVID crisis, but something which had started even before that. There was an increasing attention towards cross-border payments, and there was a realization that domestic payments, there's been significant improvements in many countries, but those developments has not necessarily translated into better experience on the cross-border payment side. And here there's been a significant amount of global focus now, and many of you would have seen this roadmap which came out from the G20 and the FSB system, the regulatory bodies, about a roadmap for cross-border payments. And that has implications all through in terms of identification, shared infrastructure for exchanging information, improvements in the way cross-border payments are processed, new platforms, and so on. And all of that has implications for transaction banking. So let me stop there, Alan, and of course, I'll be happy to build on these as part of as the discussions goes forward. Thank you.
Yeah, and I think you've raised some very interesting points that we'll want to dig into over the next half hour or so. In fact, maybe taking a sort of narrow focus now on some of the technology trends. Turning back to you, Michael. If you've been sort of digital at the core, you've generally done better, I think, over the last year as an institution. And even before the pandemic, new technologies, new competition, changing customer demands, we're all sort of shaking up the space. So if you take it maybe a step back from the pandemic, and maybe talk a little bit about the medium-term technology trends that you've seen in payments and transaction banking, and maybe in particular how digital sort of product engines and replatforming has been reshaping the industry over the last few years.
Yeah, sure. I mean, replatforming has always been a big topic at banks, right? Because just the legacy infrastructure that still exists, right, in many back offices that we have to address. Now, obviously, in the digitization space, I think what we've seen previously, there was a lot of digitization on the edges, right? How can we provide digital experiences sort of vis-a-vis our customers, right? But are we really digital at the core, right? How can we sort of internalize this more going forward? And that's, I think, there's more need or interest right now to do that. Of course, for some of the things we need to do, customers looking for a sort of custom solution, and we would call them mass customizations. We need to react quicker, right, to specific trends, right, that or needs, right, customers have. In the past, a lot of the transaction banking was a little bit silo-driven, right? One size fits all for that specific transaction type, not many choices. We've tried on, obviously, as I said, on the edges, provide digital experiences. But now we see, we really got to reflect to the inbound side and see how can we reduce the silos, really have sort of a digital framework interacting, right, across the board with a lot of these sometimes very silo-driven, right, payment types or transaction types that have existed. And I think we've seen a lot of movement in this, right, in the last couple of years, also within the industry, right, where banks recognize, yeah, you know what, we've tried electronic banking, mobile banking, we understand and we're doing it, but we need to do sort of, what do we need to improve in our own payment systems, right, within the country. So a lot of move, right, to instant payment schemes across the world, right, first slow, but now everybody's doing it. Standing up, instant payments, including directory infrastructures, requests to pay to close the loop, right, between buyers and sellers. It's quite amazing. But also in the cross-border space, right? The industry got together a couple of years ago, created with Swift, right? Swift GPI, very successful. So successful that now in the industry is saying, okay, we're comfortable now to re-engineer our entire cross-border architecture, right? And move to a new platform, right? How we want to manage transactions even between banks. So that change has picked up dramatically. Now, what needs to come out of that was still, right, everyone's a little bit focused on their respective silos. We really have a discussion on end-to-end data standardization, right? I'm myself part of ISO 2022 efforts in cross-border banking, but the same needs to go beyond that, right? Yes, to the corporate side, but also other payment types, having the dialogue there with the card schemes and the likes to really make everything, all open systems more interoperable, right? Otherwise, we can't really achieve, I think, a lot of those digital experiences that we would like to, right? I mean, a lot of the closed loop platforms that are out there have really shown us how it's done. Obviously, they have a lot more control, right, on their sort of the inner workings as well as their channels, and hence can much quicker react to the needs than sort of the open networks that banks operate in. But I see, as I said, right, we see now willingness to really work, cooperate together, think across, and come up with a long-term roadmap, how we can really provide, right, much better end-to-end, right, experience, and then be able to innovate and customize, right, around it for specific use cases, right, that banks need to focus on to really drive innovation in certain areas.
Thanks, Michael. And turn to you, James. I want to pick up on one of the points there. What Michael talked about is innovation at the edge. Obviously, digital at the core is important, but we're also seeing a lot of corporates looking for a better front-end experience in transaction banking. And given that no two corporates have the same expectations, what are you seeing as some of the innovations in digital engagement and customer experience management that are important for to deliver?
Yeah, absolutely. I mean, obviously, especially at the large corporates want a market of one. They don't want sort of standardized portals from the banks and other suppliers, actually. So and typically the larger corporates usually have their own sort of ERP networks, so they want very specific capabilities that fit their own sort of business, and so therefore from a bank point of view, what we're seeing is the need for a standardized digital engagement, I would call it layer, so that you can sort of basically skin the experience for particular corporates in a very rapid way, but using the same standardized backbone. So the behavioral patterns are the same, but configurable for a specific corporate, and then specific capabilities are delivered. The most advanced sort of banking providers tend to allow for unique experience according to segments, and certainly according to some of the largest customers that they have, and that requires that a particular type of architecture to still provide the standardization, but then provide the extra mile experience on top. So a separate sort of experience layer that can provide that unique experience. Going back to other sort of requirements, though, we can see around the edges, so to speak, quite a lot of transformation coming in that will affect commercial, corporate, and SME banking globally over time, and especially in the payments space. There are already you can see the pace gathering speed in the cross-border payments arena. So not just SWIFT going through its needs to be relevant to the market, but initiatives and Finacle included, providing new types of cross-border payment architectures. In our case, a blockchain-based solution that has started to focus on remittances in the main payment corridors in the world, but changing the settlement model, which is the most fundamental issue when you're dealing with cross-border at bulk and volume and financial flow. But we're also working with and seeing a large number of initiatives with providers that already have existing payment roles. So the card companies that traditionally have global network operations, looking at the rails and looking at how they can revitalize their businesses towards sort of different patterns that could, to an extent, supplant the traditional correspondent banking SWIFT type cross-border payment network. So you can see that in the sort of arena of where this sort of global transaction banking is, there are a lot of initiatives that will mutate the behaviors of the way the landscape works. I think the most interesting thing is actually the models themselves that have been there for 20, 30, 40, 50 years and beyond are now being challenged in their own right. It's not just about new technology, it's actually about thinking about new types of schemes from a systemic point of view that can better serve contemporary society globally, I would say, and obviously transaction banking being one sort of facet of it. But there are quite significant changes, I think, especially in the payment space, that will change the way payments work in the next 10 years, beyond instant payments into much more global patterns.
And let me pick up on that minute and go back to you, Harish, and maybe talk about something that you raised earlier, which was around sort of open APIs and data sharing. We're beginning to see the sort of evolution of business models in financial services, and transaction banking isn't going to be an exception. And it would appear that much of the future of banking is going to be around building platform businesses that can tap into new and diverse partner networks, within a larger ecosystem. And, we're beginning to see banking de-layer a little bit, where the front end decouples from the back end, decouples from the regulated balance sheets. And you obviously see some of this happening, strongly in emerging markets. China, is an example. So, what do you think those business model implications are for emerging markets and developing economies as we see a more fragmented, partnership-driven, banking industry emerge that is far more reliant on interconnectivity than it's been in the past?
Yes, and absolutely. Thank you, Alan. In emerging market and developing economies, the non-bank players and fintech companies are making a big play for customers across the segment, both individuals and businesses, of course, but more focused on individuals, and then certainly also in the bottom 40% by income levels. And they're, of course, limited because by regulation and because of other dynamics to what kind of services they can offer, and very often it cannot go beyond payments, right? But as the customers get used to these services, they have other financial needs, and which is driving a lot of partnerships between the fintech companies and non-banks with banking players. And of course, there are different ways you can approach it, and some of it is leveraging the platform business model. So I think that's one big driver we are noticing. And then on the other hand, there's also quite a bit of developments on the digital economy side. The markets have typically been unorganized in things like personal care, taxis, even small retailers, etc. The emerging markets, many of them have been unorganized to begin with, but the digital economy trends are organizing these markets, bringing together the suppliers and the consumers in different from education across the spectrum, right? And this suddenly makes it easier for banks to service these customers now in a much better way, because the market is organized. They have more information about the business through the platform, and we are seeing these partnerships being struck now, and banks have a play on both sides of both sides in terms of the suppliers of the services as well as the consumers who are borrowing, right? So I think that's the second trend we are noticing. And the third is about the government stimulus payments, which is coming in, which is again encouraging banks to develop digital capabilities, gather more information, and aggregate information from various places, right? And then the other trend we are also noticing is the market is, of course, very segmented in terms of even amongst banks. There are a big chunk of smaller banks focusing on certain geographies, certain communities, credit unions, and the likes. Their digital capabilities have not kept pace with the developments, and some of them are having to build digital capabilities in a very, very short amount of time. And one model we are seeing emerging is these institutions are relying on some bigger players to help them to kind of bridge the gap. And in some cases, they are forming consortiums and who offer services to their membership. And I think that's the other model we are seeing, and we are seeing this play across countries, even from the likes of China to India to Philippines and many countries in Africa as well. And lastly, I think perhaps one can argue that it is in reaction to all of this, and in some cases also motivated through promoting competition, is this drive towards open banking in many economies. Began in the UK, and it is now moving to a lot of emerging markets and developing economies as well, which is basically forcing banks to open up access. I think banks came a little bit kicking and screaming into this, but now they're realizing that perhaps there's an opportunity for them to play this and become more specialized and expand their base and provide more services to their customers. And that is also motivating quite a bit of these platform models. And I think all of this kind of shows that the future is more towards bank as an institution, keeping the customer at the center of their attention and seeing what best meets their needs. And they might not be the choice, preferred choice of the customer for a particular product. And they might have to be willing to facilitate the customer being able to use the services while maintaining some core relationship with the financial institution. So I think with that, let me stop. I'll end at this point, and of course, I'm happy to build on this later. Thank you.
Thanks, Harish. And I think we'll come back to some of these topics maybe in a later question. Michael, coming back to you, I want to pick up on something that you said in your first answer about remote working. You know, I think it's clear that we're never going back to having everyone in the office. I heard from the chief operating officer of a major global financial institution who said they never intend to have someone come back into an office and sit in front of a computer, you know, for 8 hours to do work. And that's going to imply moving to far more paperless processes, you know, minimum human intervention. Do we think that, you know, regulators are going to be more receptive to electronic documents, fully digitized processes than they've been in the past? And, you know, what's been the Wells Fargo experience so far with driving digital first operations in transaction banking and doing so with a fully distributed workforce?
Yeah, I know that's an important question. Depends really, as you said, on your regulatory environment. In the US, obviously, you have federal and state level regulations. So there's a lot of things you need to have an eye on, right? Definitely some processes are there. I mean, that have been sort of made fully electronic from a reporting perspective, right? On the regulatory side, just the amount of data that's there, right? But how we conduct business with customers, yes, banks have been in a lot of cases still very, very paper driven, right? In that, and the pandemic and not being in the office really suddenly pushed, right? The move towards, okay, how can we quickly electronify, right? A lot of these business processes have been quite a catalyst, right? And so in the areas where we sort of had, pilot programs and stuff already sitting there ready to go, this was great, right? Because now we could really implement things quicker because, let's say, internal policies and procedures were now able to, change quicker, right? Than they normally do, just due to the need of it, right? Putting portals up, how we exchange documents with customers, right? They can electronically review, sign, comment, right? Now, this only can happen quickly. We're sort of prepared, right? If you had things already in the hopper, right? I think it would be very difficult, because definitely a large organization, if you have never thought about it, right? Because then you wouldn't get even the support from the vendors, right? So if you had sort of things ready to go, you just needed the final push to scale it up. This was really great time to do it, right? Now, as I initially said, some is just infrastructure related, right? Even internally, some people just love to print things. In the office, you can't, plus you need to lock down the printers due to information security. So you need to provide more monitors to people at home. So if they want to have a document open on the left, right, and do something else on the right, that does actually work, right? In the office, they might just print it and put it next to their desk, and that doesn't work anymore, right? So that's sort of infrastructure investment that needs to follow there. Now, from a U.S. specific perspective, I think where still in progress need to be made is establishing full digital identities end to end, right? Some countries have done that. Even like India, right, with their national infrastructure that's already out there. Other countries, Europe has done in some areas. U.S. a little bit behind, partly due to the federated nature of the government, right? These are to federal level, state level, who's issuing it, worry about big government as well, right? It's obviously, some countries are concerned, but yes, if you don't really have, right, clarity on issuing of digital identities and how they should be used and who's issuing them, then the true digitization, right, is much harder, right? Anybody can, emulate obviously a signature on a piece of document and then put it up somewhere, but really have it digitally certified, right, in a legal manner. There, that infrastructure, right, I think is something that US is still lagging behind, right? Other countries have done that, right? But I think that's where we need to see the next step of, well, regulatory investment, right, to make sure that that can actually happen, because that could be really bring us over the hump, right, for the next level of digital experience in this space, and really get rid of the paper and not just having electronic representations of paper.
Yeah, I mean, I think we saw quite a lot of regulatory forbearance last year, which I think was good because everyone had to react, and we were collectively trying to keep the economy, afloat. I think we are beginning to see a little bit of the regulatory backlash at this point, which is saying just because we let you do this last year doesn't mean to say that this is the new normal, going forward. So I think trying to find that middle ground in what is clearly a rapidly evolving situation is going to be critical this year. James, coming back to you, you mentioned the blockchain word in one of your previous answers. And many banks are pursuing automation via blockchain, other distributed ledger technologies, to advance their platform strategies, deal with issues and things like international payments. So from a corporate customer perspective, can you share your views of how that type of technology is going to influence the dynamics of transaction banking and maybe unlock new possibilities for the industry?
Yeah, absolutely, Alan. I mean, I think the key is in the sort of the basic premise of blockchain, not the technology, but the concept behind it, and anything that creates a single point of truth that's universally recognized changes the nature of the boundaries of the participants in terms of what they will trust and what they can depend on. So certainly in the sort of commercial and corporate world, supply chain, it's traditionally had a whole series of interplays and boundaries and specifically sort of build outs of information as instruments mature, as goods and services move through supply chains. And of course, if you've suddenly got a technology that allows you to understand that even if it's even if a sort of bill of lading has been provided by an intermediary third party, it's immediately available and added to a particular construct within the supply chain, such that all participants can see. That type of world changes the nature of what you can do significantly. We've seen that not just with Finacle, but with other solutions that are providing the technology underpinning schemes around supply chains around the world, where instead of having a sort of the classic sort of boundary of a bank back office manufacturing different types of instruments, guarantees, letters of credit, export import bills, and essentially the consumers, the corporates and commercials and intermediaries going to the market to source instruments. We've seen the change to a sort of marketplace where the blockchain has underpinned supply chains. So you can see that the sort of model shifts when all participants can suddenly start to see, for example, invoices being raised, goods and materials moving through supply chains. The financial aspects of what can be offered in a proactive way. So you no longer have the same dynamic of in terms of supply chains that were once there. So I think that will become universal over the next 5 to 10 years. And then obviously identity will become ultimately, I think, universally recognized. So the risks inherent in supply chains, not knowing who the end points are, what risk there is in the endpoints and the intermediaries, that will start to not dissipate, because the risk will always be there, but it'll become transparent as more is known about the individual participant, the entities within a particular supply chain. So I think the shifts are going to be quite dramatic over the next 5 to 10 years in that space because of blockchain, because of that technology.
Thanks, James. And you're talking there about banks collaborating, on blockchain as a single source of truth. Harish, one of the things that we're also seeing, I think, is banks coming together to think about industry utilities, to share processing activities. And this is potentially bringing together competing institutions in a market to perform, a set of non-differentiating services. I mean, how do you see the sort of future of utilities in the transaction banking space? What are the use cases that you think are going to resonate? Is it just things like KYC, or are we going to see utilities emerge in other areas of transaction banking, do you think?
Yes, indeed. And this is being reflected, of course, in a number of domains. And historically, I think if you look at the payments industry, it evolved, shifting from shared server, kind of evolved into a shift to shared services in the form of check clearing houses, the industry consortiums like Visa, MasterCards, and then the likes, right? So we are seeing this emerging again in the form of the fast payments now, where each bank was wanted to introduce fast payment services, and very soon there's a need recognition that to compete against some of the fintech services, the banks have to get together, and many of the fast payment schemes which are being designed across the world are led by banks, so the banking consortiums, or by central banks, bringing together the different industries. And these are the structure is a classic, kind of it's incorporated, it is structured as a not-for-profit, typically run as a utility and providing some core business functions, and brings in services like e-liaising and common hub for an APIs and so on. So I think that is one trend which we're very clearly seeing. There is also these new kind of infrastructure which are coming up for fast payments. They're also bringing in new services, as I was mentioning about APIs, the alias-based payments, and they're also third-party initiated payments. So they become an easy way for banks to implement open banking in a sense, right? At least some elements of that. So I think this open banking trend is also likely to be something which will drive towards more some kind of utilities being set up. The area getting a lot of attention, of course, is KYC, and Alan, as you rightly pointed out, and there are a number of drivers for this because of the high rise in compliance costs. There is a desire to see how we can how banks can reduce costs, and then also to take advantage of data analytic capabilities. When you apply that across the whole industry's data, I think it becomes much more powerful. And in that sense, I think these utilities would be a good way to move forward. The other trend which I'm also seeing is as the platform business models evolve, we are seeing parts of finance like receivables financing moving on to platform-based models, right? And then we are seeing lending platforms which in some sense are also evolving in some countries into like a loan origination platforms, like where the people who want to borrow express their interest in borrowing, and then there are multiple borrowers who are willing to look at their applications and decide whether they want to service the loan. And that itself, in some sense, is becoming some kind of a utility function now, where it houses certain functions which are undifferentiated and which provides utility to the entire market, right? So I think this platform business model, I think along with it, brings in some level of this industry utilities emerging, right? And then fraud management is another application where I see there could be quite a bit of collaboration going forward. And I think we should not forget some of the hidden forms of industry utilities like call centers and cloud computing, et cetera, which is always there. And I think perhaps will grow more in prominence as we move digital. So I think those are some of the trends that we are seeing. Thank you.
Thanks, Harish. Michael, Harish was talking there about the increasing importance of APIs and API gateways in corporate and transaction banking. Yeah, I'd like to hear your take on, what the possibilities, how Wells is using, APIs to drive innovation. I think particular, what's the dynamic here is that you're pushing customers to use them, or are you seeing the demand from customers and ecosystem partners, which is forcing you to sort of react to it? Where's the dynamic in this growth of APIs as a sort of catalyst for innovation?
Yeah, good question, Al. I mean, API is obviously the technology behind it, right? But the need is really here for what other people call sort of, let's say, embedded banking, embedded finance, right? So moving away from having a dedicated screen branded Wells Fargo, or, Bank of America, or whatever, right? that somebody is using, right? Like a proprietary entry point, right? And I think, as we have seen, for a lot of the closed loop systems and other solutions that are out there, they early on moved into ways so they can be sort of invisible a bit in the background, right? And that was sort of achieved through utilization of APIs, right? You know, PayPal, for example, has been for years, right, being great at that and how they integrate. You know, the e-commerce portals and banks, you know, like Wells Fargo, recognize that, right? That's really where these things need to go. How can we, in order to be part really of the end-to-end transactional business flow, fully integrated in the business process, you need to have a tool that sort of can sit behind it, right? And that machines can communicate with, and that's sort of where sort of the our APIs fall right into there. And it was partially customers asking for it, and also us pushing, because we have seen already other solutions, you know, screen scraping and other things emerging, where, well, they wanted to provide that sort of generic layer across. Banks didn't have the APIs, so, well, they used to build, right, these screen scraping technologies, and that sort of requires, right, obviously, end users to share their credentials, and that's obviously problematic, right, from an information security perspective. So offering, sort of slightly pushing, right, API-driven integration for those needs, definitely in the consumer space, was a much better way to do it. And then the corporate side, partnering obviously with fintech, saying, well, I want to have Wells Fargo in there somewhere, but you got to provide me a solution to do this in a better way. So we did create in 2016 a gateway solution that offers, you know, reporting, payment initiation, has also been now expanded to support what we do over in the EU from an open banking perspective, to provide that sort of single point of integration, right? That you know, corporate customers, commercial customers, or their third-party vendors, right, can use to interact with a bank in this space. And here it's important to really have, right, the right technologies, right, the right sort of languages available, how these APIs are written. The up-to-date documentation is critical, right? Because, you know, third-party programmers don't want to read through tons of documentation. It's got to be intuitive. You got to move quickly, and then having the right sandbox environment in place so they can try things out, right? To integrate, try what the response messages are, make sure it all works end to end. And obviously, as a bank, we've got to make sure, right, this is all done in a secure way. They can sort of certify them against certain requirements and then sort of promote it eventually into production. So it's really that sort of end-to-end infrastructure, right, that needs to be created here in this space, right, to really make this work for us as well as our customers, because we still want to have a, you know, very trusted partner at the other end. But at the same time, they want to have the feel, the experience, like working with a fintech, right, when they integrate with. So that's a little bit the balancing act here as well. It has been quite successful when we work this out.
And as you say, the actual API technology has been with us for a long time. It's just in many respects the business model and the operating models have sort of caught up to make use of that level of interactivity and the ability to share externally. So I think we're beginning to come to the end of our time together, and this has been a very stimulating and interesting discussion. So I'd like to say a big thank you to each of our panelists. We're very grateful for the time and the valuable insights that you've brought to the table here around transaction banking. And also a big thank you to everyone watching for making the time to attend this session. I do hope that you found it useful and you've got some good takeaways from it. You should feel free to come back and view the recording. So look out for a follow-up email from the Finacle team, which will have a video link in it. And also feel free to share that link with your colleagues if you think that this discussion would be of interest to them. I hope you'll all stay tuned for the rest of Finacle Conclave and that you'll enjoy the high quality speakers and discussions that have been lined up for you. But for now, goodbye, stay safe, and I'll hand it back over to Lakshmi at this point. Thank you.